Our next guest says the market was waiting for a big pullback and a heavy buying drove Bitcoin off its lows. Let's bring in Meltem Demirors, Chief Strategy Officer at Coinshares. Meltem, always good to see you.
You as well, Melissa. Excited to chop it up. And shout out to Karen. I want to trade Bitcoin with her.
Maybe someday you can. We'll try and hook you guys up. In terms of what we saw today, was this capitulation in your view?
Look, absolutely. At Coinshares, as you know, we like to look at data to tell stories. We have $5 billion in assets under management. We're in the markets trading every day, primarily a risk neutral strategy. If we look at option skew, right, that had been trending bearish for the last 2 weeks. So we saw a big run up. Let's just remind your viewers, since the start of the year, Bitcoin has trebled in price, starting near at 20, topping at 65. We're now hovering around 40. Ether was a laggard, but in the last few weeks has seen its own trebling, going from around 1,000 to all the way up to 4,500 just a few days ago. So it's been really frothy. There was a lot of leverage in the market. Some of that got taken out in April. Still was a lot of leverage. So this correction we've seen, I think, is healthy. A pullback is normal in crypto. The last piece I'll add is, Karen touched on this, if we look at the macro story, institutional cash is at near record highs, sitting at 3 trillion. It was at 3.2 record high in May of last year. I think right now we're seeing skittishness around risk in general. So allocators are pulling back. We saw this reflected in fund flows last week. We saw 50 million in net outflows from Bitcoin fund products last week. So I think this is skittishness. It's tied to macro. It's tied to overall markets, tax day selling. People just get anxious, and that's what we have here.
Right. It's funny because I think it was a couple of years ago, there was a case being made that around tax season, you get the refunds and it goes into Bitcoin, and that's actually a bullish, force in the market. But regardless of that, Meltem, you're talking about allocators and this notion of institutions being in Bitcoin like they haven't ever been before. Are you surprised that the volatility in Bitcoin has not been dampened at all, that we are still seeing massive drawdowns and massive swings, even though the presence of institutions is much greater than at any other point of time in Bitcoin's history?
Sure. That's a great question, Melissa. I think it's really important to specify how people are accessing markets. Over the last few weeks, a lot of the volatility we've seen is not coming from institutions. It's coming from market makers, traders, and retail. Retail does move this market. A lot of the buying activity we've seen over the last week is actually coming from newer entrants to the market and the venues where it's happening. As I alluded to, we did see 50 million in outflows from Bitcoin ETPs in the last week alone. That maybe is some institutional capital, but we've seen far more on retail platforms. Binance is the primary platform we're watching. Record levels of both inflows and outflows on that platform. Coinbase over the last few quarters has seen consistent outflows on the Bitcoin side. And as alluded to, a lot of this market infrastructure, it's open 24/7, 365, serving tens of millions, if not hundreds of millions of customers who around these volatility spikes are looking to trade. These outages that we saw just further exacerbate order book liquidity. Weekend events also exacerbate that liquidity, because trading firms aren't working weekends in most cases. So a lot of this, in my view, is still heavily retail driven. The institutions, by and large, that we work with, that we talk to, they're not making 3-day, 5-day decisions. They're spending time, they're doing the research, and when they're allocating, they're looking to allocate long term.
Right. Karen, you have a question?
Yeah, sorry. Yes. How much of the Bitcoin story was the idea of Bitcoin being used for purchases? I know that when Tesla said they would take it, that sort of started sort of a fire there. And given this kind of volatility, I think that really can't be part of the story. But how much do you think that was baked in?
I mean, look, nobody really is using Bitcoin primarily for purchasing today. One Tesla total, I think, was bought using Bitcoin. So that story was really a non-story. If you notice, right, Elon Musk kept the Bitcoin on his balance sheet. This was really about getting some of the haters off his back around some of the recent ESG concerns that have been articulated. But as we look at behavior with Bitcoin, today, a lot of the activity we see is Bitcoin's really being used as a savings technology. We do see people people in certain climates, particularly in economies where their native currency is under a lot of inflationary pressure, potentially using Bitcoin as a means of transacting. But stable coins like Tether, USDC, and others now have over $100 billion in circulation. So when it comes to using something as a payment medium, I think we see a lot more utilization of stable coins as opposed to assets like Bitcoin and Ether that, again, people want to hold in their portfolios as investments.
Right. Meltem, thanks for your time. Always good to see you.
So good to see you. Thanks, Melissa.
Meltem Demirors of Coinshares. James McDonald, when Meltem talks about the massive activity on a Coinbase, I think, wow, this could really be upside to the quarter, this unforeseen volatility.
Well, for those of us approaching 50, we've seen a few market cycles, and we remember a few big market pullbacks. And I think we're all waiting for this implosion in the crypto space. This is the first time I've seen in my career big institutions act on FOMO, fear of missing out. I think we saw Fidelity come in, and then we saw Merrill say for some clients they would do it. And then you had this effect of multi-billionaires jumping on board, responsible, intelligent, professional investors who had built great fortunes jumping on the bandwagon. And I think that with the catalyst of the Fed and stimulus checks and money in people's hands and this really complacency in the market drove these asset prices up so high. But this was bound to happen in the space. We also see, concepts that are literally non-producing, non-usable securities and or asset classes swelling up in value. So many people made money. This had to happen, and I think it's going to continue a little bit longer. But we do have a new established investor base through these different platforms, whether it be crypto or whether it be simply the other apps that allow people to invest. I do think this is going to continue. I think we're going to see Bitcoin come down to the mid-20s level.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.